All right, thank you very much. This is a panel I've been looking forward to for quite some time. Bitcoin native financial products, pretty much something I think about all day, every day. I think it's probably the same for you guys. So I'm honored to be on stage with these three. I would assume that probably most of the audience knows who you guys are, but just to tie together yourself, the companies that each of you have founded with the theme. I think we'll start off just going one by one. Interesting way to do this, I think, if you want to each give us some idea of the realization that you had about Bitcoin, about why it's different, that led you to starting the companies that you did. Start off with Dhruv.
Sure. Yeah, I'm Dhruv Bansal. I'm one of the co-founders at Unchained. We do collaborative custody, Bitcoin financial services. You may have just seen our commercial, not sure. I'm thinking about what unique thing about Bitcoin that I realized really brought me into it. Gosh, I think it has to be like that notion of believable, real decentralization. I think when I first heard about Bitcoin, like a lot of people, I'm embarrassed to say, I very much dismissed it, like it's airline miles or it's some other scam or Ponzi or whoever's behind it. It took some repeated exposure for me to realize that, okay, there's nobody behind it. There is no company. There's no real control, and yet it does seem to be working. I found that to be very powerful and interesting, and I feel like the last 10 years just trying to understand that idea and how we can do more of that using Bitcoin.
Cool. I'm Nick Neuman. I'm the CEO and co-founder at Casa. And the first thing that I noticed about Bitcoin that actually sent me down the rabbit hole, I think, was around the ability to use private keys to actually have ownership of a digital piece of data. And maybe I didn't quite think about it in that way at the time, but this idea that I can use encryption to own this data that has never been possible before, in a way that's never been possible before, was just such an interesting new thing that you could do with private key technology thanks to Bitcoin. And the juxtaposition of this is so great but so hard to do, and so many people mess this up, was the problem that we saw with Casa and why we decided to start the company.
Hi, I'm Mike Belshe. I'm founder of BitGo. We're a custodian digital asset platform, been operating since 2013. Back in 2013, it was a different day. And people were losing their coins through all kinds of mechanisms. They were losing their passwords and losing a single key. They were losing it on web wallets that they didn't fully understand. Multi-signature technology was already enabled inside of the Bitcoin protocol, but nobody was using it. So we helped pioneer the first model that actually got some success. I guess the 2 out of 3 model, it's pretty common these days. And so we pioneered that. What got me into Bitcoin, actually, my days prior to crypto, I've been a technologist, been a number of startups, and done a lot of web browser stuff all the way back to Netscape. So I date myself a little bit differently than probably most of the crowd here. But just prior to getting into Bitcoin, I worked a lot on the HTTP protocol. I'm the author of the 2.0 version of that spec, so if you use your browser today, that's some of the work I did. And inside of the HTTP protocol, there's this error code, which you've probably never noticed nor used. It's a 402 payment required. And the author of HTTP all the way back to the early 90s, Tim Berners-Lee, recognized that there would be a day when computers would be able to transfer money automatically on their own. And of course, you can't do it with cash. Cash doesn't go into the USB drive very well. But Bitcoin was the thing that could do it. So what got me excited about getting into it is that we can finally have machine-to-machine payments that had been envisioned in the early 90s, but nobody knew how to do it. We had instead had to overlay it with this terrible credit card e-commerce layer back in the 90s in order to get the web started with Web 1.0. All right.
Yeah, thanks very much, everyone. I'll just open this up to whoever wants to run with it. Do you guys think there's a tension at all between, you call it something like the cypherpunk ideal of self-sovereignty, with it obviously embracing this technology that to a large degree does embody that, but in such a way as to offer third-party services? Like, how do you think about this? How do you find yourself having to navigate it?
Yeah, of course. This is something that we run into semi-frequently because what we sometimes will happen is customers will graduate from Casa, where they've been they'd never used Multisig before. They used Casa for a little bit to get familiar with Multisig, and then they say, oh, I want to go even more cypherpunk, totally DIY, very private, and do all of that myself. Thank you, Casa, for teaching me how to do this, and now I'm going to go do my own thing. And I think of it as them graduating from Casa because they're kind of moving on and doing something a little more technical without our help. But there is always this balance as we're helping people with things where we do need to do things with people if you were fully embracing the cypherpunk ideal, maybe you wouldn't do those things. But we try to get people as close as possible to that while still giving the comfort that they don't have to worry about things so much and messing things up. Like we're there to hold their hand through that.
Yeah, I think that notion of helping people understand Bitcoin, like which is something all of our companies really are doing, where we're often people's first touch for getting into Bitcoin. I think there is a cypherpunk sort of like, I'm supposed to do it all myself. But I think if we're all honest with ourselves, as much as verify, don't trust is the motto and the slogan of Bitcoin, we all trusted the people that brought us into Bitcoin initially, right? We trusted that this was worth our time to learn about. We trusted that we should invest the time that they asked us to do this, invest the money maybe when we first bought Bitcoin. I don't think there's many people that spend the time to totally understand Bitcoin and absorb its cypherpunk ethos and then buy some Bitcoin and then begin to custody it. Most people are getting into the ownership of Bitcoin or an industry way before they understand it. So in that sense, the people who bring you in are really, really important. Like we can pretend that we're all cypherpunks operating anonymously on the internet, but that's usually not true. We need people to educate us and bring us in. And I think something that like Unchained really stresses is there's a difference between anonymity and privacy. Right? I think the notion of privacy is the ability to selectively reveal ourselves to the world and to the people that we choose to interact with. So neither of our systems is really are anonymous in the way that maybe a cypherpunk would prefer, but all of our companies are private. We focus a lot on guarding client and user privacy. I would imagine that my colleagues here would agree with me on that front. I think, in particular, Unchained's new connections thing, which you might have seen a little spot for right beforehand, is another example of that, where maybe even if you have graduated, right, past needing Unchained or Casa or BitGo, you can do it all on your own. You're like this amazing cypherpunk person. That's awesome. But do you have siblings? Do you have parents? Do you have friends and family that aren't as sophisticated as you? Maybe you need to be the person that brings them in. Maybe you're sending them towards Casa or BitGo or Unchained. Maybe you're helping them hold Bitcoin initially when they're getting started until they kind of level up and get to your point. So I think there can be tension. I think the more that we build our businesses to make it easy to exit, right? The more that we build our businesses to educate our clients, I think we're acting in that cypherpunk ethos, even if it's not a bunch of anonymous people on the internet doing stuff. Private. I think that's true.
Well, let's see. I think BitGo might be the only regulated firm up here. We operate 7 regulated custodians around the planet. We got started a little bit earlier in the cycle, and we started as just a pure technology, self-custody, that's it. And by the way, that's still 50% of our business this day. Although some people like to think of us as a custodian, we do just as much that's self-custody. So look, one thing for the industry, and actually for the world, it's really important that self-custody continue to maintain a significant role. If we just end up back where we are with centralized banks, that's a problem. Like, we don't really need Bitcoin that much if we're all just going to use centralized banks. But the great innovation with Bitcoin, of course, is the freedom. You get to choose. And the reality is when people start accumulating large amounts of wealth, it doesn't matter whether you're talking about dollars or equities or real estate or whatever, all of a sudden you have to start thinking about how are you going to secure that. And securing that completely on your own person is also a risky thing to do. And of course, this is coming up more in the news these days. And so people do end up needing to be able to say, all right, I'm going to have some amount that I secure, some amount that I secure with the help of others. The great thing about like Multisig, which is what all 3 of us are doing here, is that this idea that you put it into a single bank doesn't have to be. Like, the old metaphors are gone. You can now have both Wells Fargo and Bank of America protecting your money, and yet neither one of them can touch your money without your permission. And of course, banks don't like to do that. They're depositories. They want to take it and they want to go make money off of your money, which is a different story. But in terms of enabling like a new class of things that we can do, a new class of what we can expect from our bank. We have that with Bitcoin. Some will opt to go full custody, like holding keys is still hard. Businesses absolutely need it for just business continuity. How do you have a public company if the IT guy holds the key, things like that? So we're going to see a hybrid. And then one thing I think for everybody in this room that probably really resonates, we need to make sure that the virtue of self-custody is known and remains significant. Because if we completely end up centralized in a few parties, that is just a repeat of where we were, and it will mean we didn't accomplish nearly as much as what we could.
I don't know. I think on the businesses need full custody through a custodian is an interesting point, and I don't know if I fully agree with that. I think it maybe depends on the type of business, where some businesses, if you're big enough and have fiduciary duty, yes, maybe you need to be using a custodian, but there are many different types of businesses that I think can use a multi-sig self-custody and have that risk distributed properly to where they can self-custody and have that option as a business.
Look, I think there's certainly a role where you can do some self-custody within a company. However, look at how we manage public companies. You need to be able to manage the balance sheet. You need to know that the CEO can't disappear. Oh, guess what? That happened at Quadriga CX, right? So, look, if you're going to invest in a business, you need to know that, there's not one guy that it's all hinged upon, and his poor OPSEC doesn't end up with you losing all your money. So that's a tricky thing to do. I think some of it can be done with multisig, but it's harder to prove to the world that you've done that appropriately. By the way, we also remember Axie Infinity a couple of years ago. It uses a, 5 of 9 multisig. Built by developers that absolutely knew how to handle key material, and yet they still ended up with 5 keys on a single machine, and they get hacked for 600 mil. Right? So the problem with self-custody from a business perspective is how do you audit the actual handing of the key? And that's where it just goes into depth. Now, if you look at backup keys, let's take a look at that. That's also had losses. We all remember Stakehound, which was holding money for Celsius at the time, lost $75 million because they forgot the keys, lost the backups, didn't have a 2 of 3. They were using an MPC solution. Again, the same thing. A business can't tolerate those types of failures, and an investor in that business really is going to struggle to understand where's the key material unless it goes through a very deep and rigorous study of exactly how the keys are handled, what's the backup procedure, what's the disaster recovery procedure, et cetera.
Yeah. I think maybe slight disagreement there, but I don't want to take us too far down the rabbit hole on that one.
Maybe I could thread the thread between you guys in the sense that I think we would maybe all agree that eventually businesses need to be holding Bitcoin. They eventually need to be doing it in some, self-custody or multi-sig, maybe kind of capacity eventually. But we would probably agree that individuals are so far ahead of businesses in their both willingness to adopt Bitcoin, I think, and their understanding and sophistication around what custody should be looking like. And I think that's super interesting to me that, I think there's a sense in which Bitcoin asks of you to ignore or go against conventional wisdom, right? Even just buying Bitcoin, when you first do it, especially if you're the only person that that's into Bitcoin, it can feel like you're doing something a little silly or foolish. Certainly felt that way for me when I was first getting into Bitcoin many years ago. But you sort of have to buck that trend and ignore the conventional wisdom, it's a Ponzi, it's a whatever, and you have to do your own research and you have to get into it. And individuals can do that in a way that businesses really struggle to, right? And I think businesses have been late to Bitcoin adoption compared to individuals because it's much harder for a business to ignore conventional wisdom, right? They have regulators, auditors who are asking things of them. There's a certain received wisdom that, you don't do things yourself, you outsource them to a reliable and responsible vendor like CrowdStrike. And that can, of course, lead to problems, but since it's the conventional wisdom and it's what everybody expects, when you do the thing that everybody expects, no one gets upset at you, even if there are bad consequences. So it's really hard, I think, for a business to get into self-custody, even if they should be doing that, because that's not the conventional wisdom. I think something I'm optimistic about is that through the efforts of our businesses and many others, we're changing what the conventional wisdom is. Right? It's so exciting at this conference to hear people you never would have expected to be talking about Bitcoin talking about it. My hope is that in years they're also talking about custody as a meaningful part of Bitcoin, not just buying some and trusting somebody else to keep it for you. Right? I think Mike's point that if we lose the spirit of self-custody, we've lost a lot of what makes Bitcoin special is a really good one.
An interesting thing to think about is what should the future be like, and what should businesses or will they maybe become willing to go through in order to do this safely? And you look at even what was happening with Mercury Bank over the last week, where businesses were getting debanked, and out of nowhere they're scrambling to find a new bank account. And even the idea of having a backup where you can, in some future of the world, move your money to self-custody when you're in that scramble mode between custodians seems like a really beneficial and great future for businesses to me. And I think that there's something there that's maybe worth going through that pain of the extra compliance and everything that you have to do to prove you're holding the keys correctly. But you get such a good benefit of, we can't be debanked at a drop of a pin and sudden notice. And so I think that that's a future that is one, when we talk about building Bitcoin native financial products, and especially on Industry Day for businesses, to me, that is a very attractive view of the future as a business owner and CEO myself.
Nick, can I push us in maybe a bit more of an adversarial direction, let's say? Do any of you, again, this isn't just for Nick, anybody can jump in, but do you have a sense of how TradFi has reacted to Bitcoin's growth? I mean, how much of what you guys have been discussing do you think is at all well understood, or how quickly do you think that's maybe changing, or will have to change potentially?
Well, traditional finance is definitely struggling with Bitcoin and digital assets. I mean, sometimes we talk about small laws like SAB 121, accounting things getting in the way. But the reality is that these big banks look at the risk that's inherent to what we do, and it doesn't meet their profile. They have a very healthy, large business where they've managed to get the risk down to a very understandable path for them. And then crypto and Bitcoin is exactly the opposite. It's a small business with what they perceive as a very large risk. Now, if they understood the technology better, and there's a few, BNY Mellon and others that are kind of ready to jump in, but it waxes and wanes. It depends on who in the big organization is in charge of risk, and they're really struggling with it. So, look, my prediction is actually very simple. They're not going to figure it out until the companies that are on this stage are at the same level of the size of their companies. What's happening in traditional finance is the innovator's dilemma. So I'm from Silicon Valley and the West Coast. It's funny, you ask people in Silicon Valley about innovator's dilemma. Everybody's read that book. You go to the East Coast and Wall Street, they're like, innovator's dilemma, what's that? Okay, well, they've never had to face it before. And this panel is coming to get them. We are scaling the walls, and we're going to take everything that they got out of the financial system. So anyway, they're not going to get there.
That sounds good to me.
Neither of you want to follow that, I guess.
Next question.
Well, I tell you what, I was going to ask this anyway, but I'll maybe try to put either Dhruv or Nick a bit more on the spot. More provocative version of basically the same question. Do you have a theory at all as to what of TradFi Bitcoin obsoletes? Wow. Surely some. There's got to be some small, if not all of it. You don't have to be as aggressive as Mike if you don't want to.
I think I would use the word disrupt or change or reshuffle, refactor, rewire. It's
very diplomatic, though.
Yeah. Well, largely because I think a lot of the value of financial services continues to exist in a Bitcoin-denominated world. Like, we still have to trade Bitcoin for things that aren't Bitcoin. We still have to save. We may need lending and credit products. Their diversification, like outside of Bitcoin, there's a role for all these abilities that financial services industry has spent, many centuries developing. We would be foolish if we walked away from that. I think Bitcoin and Bitcoiners sometimes don't realize how much of traditional finance is baked into Bitcoin itself. Even the notion of a ledger or a UTXO. These are ultimately ideas that come from accounting. What we shouldn't be doing, to Mike's point, is offering these financial services in the same way as they were previously offered, right? Through the incredible centralization that currently exists in financial services, that's not something we want to replicate. So I would say that we want to disrupt the industry and sell the same things, but in new ways, in a more Bitcoin-denominated, perhaps more native way. And I think the fact that all of our businesses are really focused on private keys and custody, Nick even said this as one of the things that really turned him on to Bitcoin was the notion of there being private keys in the first place and being able to use those to assert your identity and your control over your assets somehow in this public way. That's such a powerful idea. If we can bring that idea somehow into financial services, I think it's a huge win. Like, we're going to get the value that we've been getting from financial services with a much stronger set of consumer protections that come from private keys. And I think that's really exciting to build towards. Maybe Mike's right that our businesses just have to get a lot bigger before what we're talking about here is considered the conventional wisdom. But, I look forward to that.
Well, everybody has and gets paid in America, not quite everybody, but enough, in US dollars. So the reality is that there's an on-ramping problem kind of no matter what. So you mentioned Mercury Bank, of course, their failures are all on the fiat side. Look, the opportunity is to make it so that all of the small people, all of the regular two-legged people in the world can actually have financial systems that aren't just constantly screwing them. I think a good place for the traditional finance to participate is the ETF. Okay, pretty easy. Like, they can kind of interface their existing system. All they got to do is custody some Bitcoin. Hopefully they don't bumble that up too much. They're going to put it into a system that trades Monday through Friday, 9 to 5 US hours. And yet, guess what? Bitcoin trades 24/7. So there is a bootstrapping problem that has to happen, but the entire system does get to be rethought. Now, Bitcoin itself, I think, does have one particular flaw, which I would like to see it fixed. I hope the innovators in this room and elsewhere help get there. We need more privacy on chain. To be honest, like, the transactions are just too transparent. As individuals, I don't think any of us want our transactions to be as traceable as they are in Bitcoin. On the other hand, today, Bitcoin ends up being actually the federal investigators' dream financial system. You can actually trace back everything, which is, by the way, it's good for catching crime. But for individuals that are honest people, we could use some improvement on that.
One of the things that I don't have fully formed thoughts around, but have thought about with what does this disrupt in the traditional financial system is actually, when you think of a bank, they've, like you were saying, Mike, they've got all these layers of compliance, and they're thinking about how to keep their risk as low as possible. And I think a lot of that has been built up because the regulators have forced them to build all these compliance measures because of the principal agent problem, effectively, where a bank has to store money for people. And so I actually wonder if maybe there's some point in the future where banks get it and understand that they can actually reduce their risk by offering the exit path or ability for people to self-custody. And so then they eliminate some of this principal agent problem that they have. And maybe there's a new type of bank that maybe starts to look like some of what we're building, where self-custody is the core of the deposit side of things, but the bank is really focused around what else can I help people with around this, and that's how I make money. And so
instead of just rehypothecating
right, exactly. Right? And so, but will there always still be rehypothecation? Yes, because some people are going to want to earn yield on their assets or whatever it is. But I think that there is this interesting idea of reducing that principal agent risk, and that actually being good for banks, good for their banking customers, and the banking industry as a whole.
Yeah, I think you're right. I think it will take new businesses to make that change happen. I think, if you're a bank and the notion of taking control of funds and then rehypothecating them, using them to earn revenue, that really isn't shared directly with the client whose funds they are. This is such a perennial, this is banking, right? This is what banking means to a lot of banks. It's very hard if you've built your business on that model over 100 years to stop doing that. And I think it will never happen, I would argue, right? I think it takes new businesses who have never done that to approach it as the solution. Of course, it's very profitable to rehypothecate. It's a very reliable business model for those who are able to do it. And it explains why it's kind of the default, right? To Mike's point, Bitcoin is just this new thing. Let's just treat it the way that we did historically. And we're sort of missing the point, and we're losing a lot of the value if we do that. But again, I sort of understand why large established organizations can't help but repeat the thing that they're used to doing. It's probably going to take new businesses like ours to actually make a difference.
On the compliance side, we sometimes have this assumption that the traditional financial system has figured this thing out. but they haven't. And that's evidenced by the billions of dollars of fines that they face every single year. The reality is that the existing compliance systems actually don't really work. We pretend they do, and people get fined about it, I guess, because they didn't do it right. But at the end of the day, they don't even work. So one of the side effects of actually having digital technology, there's a bunch of technologists coming into the crypto space that are going to go apply technology to those compliance rules that previously have been very manual. Remember, a lot of this laws that date back to the early 90s, computers barely usable, kind of compared to today's terms at that time. Others go all the way back even farther. BSA goes back to the early 70s. So one of the side effects is that just having these people, even though the Bitcoin side is different than the compliance side, it's technologists that are going to actually solve the compliance problem and have a prayer of it working, whereas the traditional financial system lacks that.
I think we're right on time. That's a wonderfully optimistic note to end on, so I think we'll call it there. Thanks very much, everybody.
Thank you.
The Bitcoin Conference. We started with a dream to build a community focused on Bitcoin. It all started in 2019 in the heart of San Francisco, the first major Bitcoin conference in years that kickstarted a revolution. And then Miami, a place where enthusiasts, developers, dreamers, and innovators could come together to make Bitcoin better. It has been an amazing 5 years and 8 conferences, thanks to all of you. Bitcoin Conference has become the largest premier global Bitcoin gathering in the world, leading hyper-Bitcoinization. While Miami was incredible, it was time to set the stage for Bitcoin in a new city. So we took the conference on the road. Nashville, Tennessee was the obvious choice, a city known for music and freedom. Next year, the conference is hitting the road again in search of the next global stage. We are headed to a new city next year. With hyper-Bitcoinization right around the corner, we have no plans to take the foot off the gas. Find out where we are headed next. Scan the QR code and be at the main stage for the big announcement.